Hello, I'm Liana Reed, reporter, financial director, and your host for today's webinar entitled Tax Overhaul, How the Pandemic and Digitalization Are Changing the Tax Landscape, which is brought to you in partnership with Tax Systems. So with me today, I have Tom Gilbert, who is VAT Technology Lead at RSM. Tom uses technology to kind of help clients meet new and increasingly digital VAT reporting requirements. Joining Tom is Russell Gammon, who is Chief Innovation Officer at Tax Systems. So Russell is responsible for the innovation team within the business, and he is tasked with moving all the products to a single digital compliance platform and with a cloud-first mentality. So thank you both for joining me today.
Thank you.
Thank you. Just before we start, I'd like to remind your audience that if you have any questions now during the sessions, you can submit them onto the on-screen Q&A function. We'll go through them during or at the end. So today we'll kind of be discussing the global trend around tax compliance, VAT gap, coronavirus impact, but also where is HMRC going with the digitization of the British tax system. We'll also be talking about 2020 as an enabler for change in terms of automation. We'll mention automation and tech solutions, but also the remaining challenges around it. And then we'll end the discussion by talking about what needs to be prioritized in 2021. So to start with, the first question I had in mind was, what is the current global trend around tax compliance? And Tom, maybe you'd like to start with this one.
Right, thank you. So, yeah, it's a really interesting question. Looking at the current global trends, I think in reality there are a number of different trends, and one of the challenges for businesses is that there's not one type of tax compliance digital reporting requirement that's put in place that everyone has to meet. I guess if you look at some of the more recent and looking forwards, if you look at real-time reporting, so real-time reporting, especially in Europe, was pioneered in Spain. So they introduced a requirement whereby not quite real-time reporting, but within 4 days you needed to submit any sales or purchases data to the Spanish tax authorities. And you also had to provide quite detailed information there as well, so it was quite challenging. Hungary then introduced a broadly similar requirement. You had to submit your output transactions in pretty much real time. So real-time reporting is a trend that is increasing. If you look at what HMRC may go, if you look at the current VAT notice, they do include something that they call supplementary data, which looks like transactional data. So in the UK, it does look like we're going to be submitting transactional data. Whether that will be real-time, probably not to begin with, but who knows? Maybe in the UK we'll eventually get to real-time reporting. So real-time reporting is one trend. I think e-invoicing is probably the next biggest trend that's kind of taken off pretty recently. So Italy introduced a quite a challenging requirement that really changed the dynamics of how businesses issued invoices. So in Italy, they introduced what we typically call a pre-clearance style e-invoice, whereby if I'm selling something to Russell, say, I can't just send Russell a traditional paper invoice like I might have done. To issue that invoice and for it to actually count from a VAT point of view, I have to issue that through the Italian tax authority system. So really changing that flow of information and putting the tax authority at the heart of that transactional data flow. So Italy introduced that. We know that there are a number of other countries who are looking at e-invoicing as well. in various different guises. So India, for example, China have got trials looking at e-invoicing. Greece, although they've been delayed, and Greece is an example of a country that did announce they wanted to do things but have delayed those introductions. And Saudi Arabia have introduced a consultation for e-invoicing. So that's one that I think is clearly going to grow in the future. Probably the third key one is something called SAFT, Standard Audit File for Tax. Quite a technical name, and there is actually an OECD standard for this. But again, one of the challenges is that even though there's a standard, each country that's implemented it has implemented it in quite a different way. And you've got countries like Luxembourg, France have got different versions. So you've got a number of different countries in Europe. You've got Portugal, you've got Norway, who, well, their SAFT has been delayed a number of years. So a number of different types of different compliance and tax authority initiatives. But yeah, really setting the scene for getting more data from businesses.
And Russell, would you agree with Tom that those are kind of the three key trends: real-time reporting, e-invoicing, and SAFT?
Yeah, I think on the transactional side of things, on the VAT side of things, it's a massive trend, and it's all digital, it's all kind of more frequent, and it's all, as Tom said, e-invoicing, it kind of changes the game a little bit on this. It's a material change to the process. I think on the other side of the fence, when we look at things like corporation tax, it's been a little bit almost, we're slightly pausing in the sense of a lot of countries are going to be using tax as a method of trying to recoup once we finally get rid of COVID. So I think for example, we saw in the UK the budget was postponed to next year. That's a good example, and I think other countries have done similar sort of things where we're all kind of slightly pausing to wait and see. So on the corporate side, things are a little bit quiet perhaps, but certainly on the transactional tax side of things have moved materially forward in the last sort of 6, 12, 18 months, and that is not going to change. So yeah, I'd agree.
And staying with you, Russell, in what ways do you think so I know that Tom mentioned, for example, how Spain was way ahead of, a lot of different countries in Europe. In what ways do you think HMRC's focus has kind of shifted towards a greater digitization of the British tax system?
So I think it's, most of us on the call will be well aware of the kind of Making Tax Digital kind of process that's been underway for the last couple of years. That all kind of kicked off last year and has been moved through various phases, and kind of phase 1 and phase 2 beginning in April next year, which had a delay of itself again due to COVID. So it's a common theme is the COVID delay and a lot of these types of things. But they've been quite they've been quite bold with it. They brought in the easiest change first and moved to submission via an API. So it didn't change what people were submitting, but it changed the way that they were submitting. So that was almost a kind of a nice start of a 10. I think the digital links requirement that's come in is much bigger for a lot of firms, particularly firms where there's any kind of level of complexity. Has actually been much more work for people to get ready for phase 2, and indeed a lot of businesses out there are still not ready for phase 2 because they don't need to be until April of next year. But it's been good to see HMRC, they put out their kind of 10-year journey, if you like, and they put out a document on that a couple of months back, and that was quite good in terms of giving a bit of a steer. So, they've got the phase 1, the phase 2, then next year we add in the smaller businesses into MTD as well. Then there's income tax, and there's corporation tax, a consultation that will happen at some point fairly soon. So you can absolutely see, one of the phrases that was used and has been used quite a lot is that HMRC said they wanted to become one of the most kind of advanced digital tax authorities globally. And while, it might have been sort of baby steps so far, you can definitely kind of feel they've kind of slightly kind of turned up the volume a little bit. It's not there. They're not doing things like e-invoicing yet, but they're certainly starting to be a lot more present, a lot more open and transparent, and it's been really good. I think HMRC has been really good to engage with the last couple of years. So I think it's definitely coming. You can tell there's been a bit of a mood shift within HMRC.
Yeah, I would add on to that as well. If we're looking at global trends, you do need to look at it on a country by country basis in terms of why are they doing this, and the bigger picture is, well, countries have got a VAT gap, so they're not receiving all of the tax or the VAT that they're expecting to recover, and especially with coronavirus at the moment, countries are under increasing pressure to try and recover as much tax as they should be doing. So then, if you look at the different countries' approach, so Spain with their real-time reporting requirement compared to HMRC and the Making Tax Digital requirement. If you look at MTD, obviously we're in the UK here. If you look at the reasons behind the tax gap, and I think the latest tax gap figures are around £30 billion, so a pretty significant amount of money. If you look at the reasons why we've got that tax gap, across different European countries and countries as a whole, that will be different. So HMRC's research of this has shown that the biggest amount, the biggest cause of the tax gap is failure to take reasonable care. So it's not fraud or anything like that. It is just failure to take care, reasonable care. So that kind of goes some way to explaining, if we're focusing on VAT to begin with, why they've put in place the requirements that they have done around the digital record keeping, the digital links especially, and the digital submission piece. So I think it is really important to look at countries and really understand their environment, and that then helps drive what they are looking to put in place.
That is actually interesting to kind of see how it's progressing country by country. And Russell, do you think, looking at Brexit, do you think that businesses are now switching their focus on Brexit? And what do you think will be the challenges with Brexit in terms of tax systems?
I mean, it's almost that kind of, I guess, perfect storm, because businesses have had a busy 2020 dealing with a number of things. Obviously, COVID being the main one, and we had a big focus on Brexit at the start of the year. COVID came along, and that shifted focus, and now it almost feels like you've kind of got to deal with both, because COVID is coming back in. It's a really tough picture for firms. So I think a lot of our clients have been in that kind of firefighting mode, trying to just do what they can. I think obviously the good thing was for Brexit, at least, that a lot of people had done preparation work sort of last year and coming into this year before COVID hit. So lots of people have got those kind of plan B situations, the what if scenarios, what happens if we get a no deal scenario. So I do think that businesses have done some of that prep work, but by no means all of it. And a lot of people were leaving it until this year and have just been stretched way too thin. So we are seeing people, having kind of modelled out and worked out what does this look like for us. For some businesses, it's massively impactful. For others, it really it has less of an impact. It depends on obviously the industry and the type of business you're doing. So we are kind of seeing it all land in that perfect storm as we head into the end of the year. I do feel quite sorry for those that are working in tax in-house and broadly across finance, because it is just a really tough time, which is, I think, why some of these projects around things like MTD have maybe fallen a little bit down the timetable, but they can't be put off forever. So it's been a tricky time, I would say.
And we did a report on the future of tax back in September. And in the report, it said that 45% of respondents were concerned about the general compliance with MTD for VAT Phase 2 that you mentioned earlier. What are your thoughts on this? Russell, if you'd like to answer that one.
Yeah, just to say, when we say Phase 2, what we really mean by Phase 2 is the digital link. So, what we mean by that is effectively that HMRC want you to, I guess, show your workings, in the sense of you need to be able to demonstrate the figures sort of coming in from source and how they are being kind of transformed and translated into the kind of 9-box VAT return before submission to HMRC. So it's the kind of, when I talk to people, it's almost like, when you go back to school and remember you have to kind of show people workings that you kind of go through. So you can't do things like copy pasting. There are exceptions for certain things like partial exemptions, but generally speaking, you need to be in a much more kind of robust manner, I think, dealing with your VAT process. And I think the reason that I would say that's so high is having spent a bit of time in VAT processes over the last couple of years, is that wasn't necessarily a big priority for businesses. It was always kind of seen as a slightly more of a low value task. It was just kind of the report that needed to get done, and it was therefore a very, very Excel driven process. And for many people, it kind of served the purpose, but it probably wasn't the most loved process, and it also hadn't changed in a long time. So nothing materially had changed to the kind of that submission process for quite a long time, and therefore, when kind of MTD came along, and particularly phase 2 MTD, which will mean that for a lot of people they need to change their processes, because a lot of processes would involve steps in them that will no longer be allowed under phase 2, and that's probably why that number is quite high. And it does seem that in a lot of instances people have pushed those projects back and back because they've had lots of other things on the radar, and rightly so. But at the same time, we are now seeing, I suppose, probably over the last 4 to 6 weeks even, the number of people wanting to engage and talk about the kind of phase 2 projects and getting themselves fully compliant has massively increased. So I think people are now starting to look at it, but it's been one of those things that always, I guess, falls to the bottom of the to-do list slightly, which is probably why the number's quite high, and also because I think it's not necessarily straightforward when those processes are, ingrained in business and perhaps haven't been changed for, 7, 8, 9, 10 years, and maybe it's all done by 1 or 2 people where the process isn't particularly well documented. It actually can take quite a bit of time to unpick that and replace it with either new technology or better processes or whatever it might be. So it's not a straightforward thing, whereas MTD phase 1 was, for many people, was a very, very straightforward process.
Yeah, I'd echo that as well.
Tom,
the digital links piece is definitely the most challenging out of the 3 MTD requirements. I guess why HMRC gave a nice soft landing period and then pushed that out further. I guess for some businesses, if they've got a nice simple accounting system that does everything for them, digital links is not going to be an issue. For the majority of businesses, especially medium and larger businesses, if they are getting data, preparing their VAT returns in Excel, then it's those types of businesses where the digital links piece really can prove quite challenging. And again, it's a bit of a range. For some businesses, it might not be too difficult. For others, if they've got a number of legacy systems, you get some systems that really just can't provide the data to have a digital link. So for some businesses, it can be incredibly challenging.
And actually, in that same report, we saw that 12% of respondents said that they had concerns as well in relation to their reported VAT figures. Does this come as a surprise to you, Tom?
I guess it probably goes back to what Russell was saying just now. I think historically, creating the VAT return has just been about filling in some spreadsheets, potentially continuing a process that has been done for many years. And I think in recent years there has been a much bigger focus on that compliance side. So no, I'm not surprised at that.
And Russell, do you think that is still a large number, 12%, to still have concerns on reported VAT figures?
I think it's. I would hope that number is falling to nearly zero over the course of the next, 6 months, as people continue to kind of have to put a bit of focus on the VAT process. It still feels, more than maybe we would hope, but it's not particularly surprising. And I think, it's one of those things that people have had to sit down and go, right, what we need, for some people in their processes where Tom says, they are potentially significantly out of date. They've had to, you can't really necessarily kind of sticky plaster over them. It's involved, getting some technology, maybe getting some consultancy, and therefore obviously spending money and budgets. And as you know, it's been, this year's been a very tough year for budgets given the kind of situation we're in. So I think it's a tough one to crack, but I think people have kind of got no choice. And therefore, there are unfortunately some people that still are kind of lagging behind. But I suppose if you ask that question, 2 years ago, I'd suspect that 12% is probably quite a bit higher. So I'd expect that to be a downward trending number, I would hope.
Yeah, and in terms of if you're looking at the VAT return, then obviously the VAT return is driven by data. If you ask people what's the quality of their data like, a lot of people will say it's not great. So if the quality of data is not great, it kind of means that you can't really do an amazing amount of review on that data, or it's very difficult to. So it's not really surprising that people's confidence in the actual numbers are not as high as they maybe should be.
And we've seen that obviously this year with the pandemic, it's kind of obvious that everyone's gone to remote working, and a lot of firms and individuals have thought, okay, maybe I should leave the spreadsheet behind and now start digitizing my tax system. And also 2020 was the year for MTD. Tom, staying with you, how has 2020 kind of been an enabler, for change in terms of the digitization of tax?
I guess with making tax digital, it's you can't avoid it anymore. Obviously, we're just starting, going through and kind of finishing off, I guess, on the MTD side. For VAT, we've got other MTD elements coming in. For income tax self-assessment, for example, we've got consultations coming potentially the back end of this year, maybe next year for corporation tax. So I think it's kind of showing that tax digitalisation is not going away, and it's just going to become more important. I think people have realised that the data quality is key. A lot of people that I've been speaking to have been looking at data quality and putting in place methods to improve that, so that the quality of data flowing through their VAT returns is improving. I think things like remote working, using new technology, I think this is just showing to people that, I guess people do need to change in terms of what they're doing with tax compliance. But there are technology tools out there. There are things that people can do to make their VAT returns better. I think that's really what we're seeing.
Yeah, I would just add to that. I think, yeah, exactly. I think 2020 has been, it's not been the best year. Don't get me wrong, but I think from a technology viewpoint, it's massively accelerated a number of areas that otherwise would have taken, a long time potentially to come to fruition. So we've seen material moves forward in terms of, the adoption of technology for a number of different uses, remote working being the most obvious one, but that kind of spills out into other areas. For example, communication. So what does your tax process look like? Potentially a lot of businesses use advisors, and therefore how does that kind of communication work, and how much has the move to remote working changed that? I think I was reading a report in the last couple of days from McKinsey, who've done some interesting studies on people's investment in technology this year. Technology firms tend to be actually the firms that have kind of bucked the trend in the crisis and have actually done very well because of the adoption. If you look at the stats around the use of things like Microsoft Teams, for example, it's gone through the roof this year. So we've seen some of those trends, and that kind of goes alongside the digitalisation of tax. As Tom said, that it's not going away. There's going to be more, not less. When you're looking at the frequency of reporting, it's only ever going to go one way. It's going to become more frequent, and therefore technology is the answer in a number of ways that can cut time out of processes and allow you to do things quicker and more accurately. So I think we've certainly seen in our business a lot of people wanting to engage with us, not just because we've got technology for tax specifically, but because it actually will enable them to cut significant time out of the process, which I think is key, where you've got lots more reporting to do and potentially fewer resources to do it with. So, yeah.
Actually, I think a really important point to note there as well is that when we talk about automating processes, a lot of people, a lot of businesses think, oh, that's just going to take away headcount, but that isn't necessarily the case. What it actually does do is it frees people up to actually do more added value tasks, and instead of doing whether it's copying and pasting or playing around with spreadsheets and not really using their sort of technical knowledge and expertise. If they free that time up, they can actually review things a lot better, get on with the other tasks. And I saw a recent statistic, I think it was a Thomson Reuters survey actually, and it was looking at, well, the question was, do you expect that increased automation will reduce headcount in the tax function? And 43% said unlikely, and another 2% said never. So I think it's quite clear that automation is not about getting rid of jobs. It is about allowing people to do their jobs better.
That's definitely a good point that you've made here. And just before moving on to the next question, I just wanted to push a poll question to our audience, which is the wish list for 2021. So what's on your wish list for next year? The first is more flexible working. So would you like to continue working from home? Cloud-based tax technology, real-time accountancy, reporting, reliable source data and error flagging, automation of complex processes, or more guidance on MTD regime change. So I'll just give our audience a few seconds to answer that poll question. And then I will click on submit and go through the poll results. So 33.3% of the audience said that they're looking for automation of complex processes. 33% of us said more flexible working, and 22% real-time accountancy reporting. Tom, what are your thoughts on this? Does this come as a surprise at all?
I've quite enjoyed working from home, to be honest, so I'm not surprised at that one. Although, saying that, I did go into the office yesterday, and it was nice to get out of the house for once. Automation of complex processes. Yeah, I think I'm not surprised at that one. That's great. More guidance on MTD regime change. That's interesting, and I guess that shows that HMRC has actually done quite a good job at talking about what the requirements are. So if I was from HMRC, I'd be quite pleased with that. Real-time accountancy and reporting. Yeah, again, that would be nice. I think they all make quite good sense, to be honest.
And Russell, what do you think about the sense on more guidance on MTD regime change?
Yeah, I'd echo Tom's point. Clearly, HMRC are doing a good job of communicating out to the audience. And I do think, as a general, having spent, the bulk of my career in some way, shape, or form doing tax and tax technology, if you wound the clock back 10 years, I think there was a general perception that HMRC were a bit of a black box, and it was very hard to kind of get much out of them unless you knew the right people. And I think that has absolutely changed. HMRC have done a really good job around MTD. They've been much more visible. They're very comfortable and able to talk at events and things like that, whereas maybe a few years ago they weren't. So I do think HMRC have done a much better job over MTD, and I've seen a bit of a step change there. So I think that would echo that. I think people are quite comfortable that they know what they need to do, and I think maybe to some of the earlier questions, maybe they just haven't done it yet, but they certainly know what they should be doing.
And do you think that the 33% that said that favor automation of complex processes, does that still highlight again kind of that increasing trend that we're going towards automation?
Yeah, I think people are seeing that. Right? I think because if you look over the last few years, a lot of technology has come out that can automate what previously or what in certain institutions currently is done in a very manual kind of time-consuming way. So as Tom pointed to it exactly right, you've got people who are very highly qualified, possibly people with accountancy qualifications and tax-specific qualifications or whatever they might be, and when you dig into what they're actually doing in their job, they're spending 20, 30, 40% of their time doing really kind of low-value copy-paste or filtering or manual error checking and Excel kind of work, which isn't necessarily the best use of their time. So we've seen a really big trend towards automation, to look to technology to say, well, where are those processes that are currently taking a lot of time that we can increase? So things like RPA, which is robotic process automation, has been something over the last couple of years that's really kind of come to the fore, as have other kind of specific tax applications that deal with specific areas of tax. So I can totally understand people wanting to spend their time tackling them. Yes.
I think the only one I'm a little bit surprised on is the reliable source data and error flagging. But if we're talking about what's on the wish list for 2021, I kind of think that the data quality is a bit of a longer term issue to try and get over, and some of those other points such as automation kind of comes first, and then it's like, you improve the data quality and they're kind of follow-on activities as such.
That is definitely quite surprising. And just staying on that topic of automation, so how can automating your tax filing today be beneficial for businesses? What issues can automation tackle? Tom, maybe you would like to answer that one?
Yeah, that's a good point. I mean, if we look at what the current processes are, then automating should reduce risk and reduce time. And if you take that to your boss and say, this is what we're looking to do, it's generally a pretty good business case. Throw in it's a legislative requirement, and it's very easy to get sign off for projects. And I kind of found that when I worked in industry a couple of years ago, whenever countries introduced new requirements, it was straight away easy to go to the CEO of that specific country and say, look, you've got this requirement coming. We need to do something about it. Let's set up a project team and put in place a process and put in place whether it's automation, whether it's meeting new reporting requirements. But yeah, I do think I think going forward, I think if we go forward 5 years, I think it's going to be very rare that businesses of a decent size are going to be doing things manually. I think most things will be automated in terms of getting your sales and purchases data, if we're focusing on VAT, which I do, so apologies if I talk about VAT a lot. If you're looking at getting that transactional data and how that then flows into the VAT return and automated error checking, I mean, if you look at Spain, for example, what they do in Spain, because you're submitting that transactional data, the Spanish tax authorities compare, again, so if I've sold something to Russell and I've submitted in my transactional data that my sale to Russell was €200, if Russell then reports that purchase at anything other than €200, it immediately flags up on the Spanish tax authority, and we both get questioned about it. So I do think in the future, automation is going to help both tax authorities as well as businesses. And there are actually some quite interesting statistics about tax authorities implementing technologies such as robotic process automation and artificial intelligence. I think I had an OECD Tax Administration 2019 report that showed that if you look at robotic process automation, 2/3 of the tax authorities had either got RPA in place, were implementing or planning. That included HMRC. HMRC uses a lot of RPA in their processes. And then if you look at artificial intelligence, which I guess is the next step up, so that's kind of saying if I'm selling something to Russell and we're both submitting information, potentially running AI over that to see, does it kind of make sense? Or if I'm submitting other information, does it make sense? And the statistics on that, I think 60% of tax authorities were planning on using AI. A number, I think a quarter had already got AI in place or were implementing AI, so a pretty small number were not using it. So I think it's clear that tax authorities are really using or planning to use these innovative technologies. And I think businesses, by using automation and technology tools, that really helps put their VAT return in a really good position.
And what then can we expect in 2021? Russell, I know that Tom's just mentioned AI, robotic process automation, and how tax authorities are likely to embrace AI. What, in your opinion, what will be the major trends ahead?
I think both of those are absolutely applicable, and I'd agree with Tom that they're definite trends in the industry. And that, from the flip side, I think the kind of technologies, things like AI, are now becoming more readily available for people to use. If you wind back a couple of years, AI was either very expensive to get your hands on as a technology vendor, or so it was therefore really only available to businesses with big budgets. I think now looking at people like Microsoft, they've got excellent kind of out of the box AI components, and therefore actually getting AI out into the industry is a lot more realistic than it might have been a couple of years ago. So I do agree that those kind of things are coming. I think certainly a trend we're going to see for 2021 is, touch wood, once we've got a real handle on the COVID situation, it doesn't escape anyone's knowledge that we are going to have a massive deficit because of COVID, and the budget got pushed back, and you can therefore expect almost a bumper budget. So I think from a tax point of view, we are going to see a material change across all of the taxes, and there's been lots of rumours around changes to personal tax and things like that, but I do expect a pretty full scope kind of sweeping review in that budget, and that of course will then trickle into businesses and their processes and how they kind of do their returns and all the rest of it. And of course I couldn't tell you what's going to be in that budget or exactly what's going to be there, but I do expect us to start having to sooner rather than later deal with the big deficit. Things like furlough will cost the Treasury, so there's going to be a lot going on in 21, but a lot of them being technology and some of them not.
Yeah, I kind of echo that as well. In terms of kind of tools coming to the market and solutions that are useful to businesses, I do think we're going to see more and more solutions that do have useful functions around AI. I think AI is one of those buzzwords that has been around for a few years that most of the time doesn't actually help, but I think it's starting to actually be useful.
And we can see a lot of benefits around it, especially as, like Russell said, we're going to move to more remote working probably next year. But Tom, do you see any remaining issues around tech that digital processes still struggle to undertake today?
I think, that in terms of the technology, I mean, in reality, implementing technology solutions, historically it's been quite expensive. I think going forward, like the costs of tools should come down. Sometimes getting a business case for putting in place a new technology solution can be challenging. I guess one of the things that I've seen the last 6 months that's been quite interesting, and probably off the back of MTD, is more and more businesses changing their legacy ERP systems and putting in place some of the new cloud-based solutions like Microsoft Dynamics, like Oracle NetSuite, for example. That's been quite an interesting trend that kind of gets you away from some of the legacy issues that getting data out of those older systems present. I think for those businesses that haven't yet migrated onto a newer ERP system and still have an old system, I think they are still going to potentially have some challenges there. So that might be a trend. The next couple of years, you just get more and more businesses migrating over to new accounting packages.
And just before moving on to the next question, I just had one last poll question for our audience, which is, what do you see as the main challenges of digitalizing your tax processes? So the first one is training. The second one, limitations in technology solutions, data quality and analytics, keeping up to date with new legislations, entity digital links or digital auditing, integration with existing systems, and at last, buy-in from the business. So I'll just give our audience, once again, a couple seconds to answer these so that we can then go through the poll results all together. So, well, the majority of the audience actually said it was the existing systems. 5% said keeping up to date with new legislation, and 15.8% said data quality and analytics, and 5% also said training. Russell, are you surprised that the majority said integration with existing systems?
I mean, first off, I'm very happy that it's not limitations in technology solutions, given I work for a vendor of a technology solution in the space, so it's clearly we're doing something right. That doesn't surprise me, to be honest. Integration with existing systems is exactly the point, exactly the pain point. I think Tom just touched on exactly why that can be. I mean, some people have the ERP accounting packages that are, 15, 20 years old. I remember looking at one about 9 months ago, and it was still genuinely the kind of old school green screens that you'd see, sort of Lotus Notes, Lotus 123 style. We're talking that long ago, since it has been given an upgrade, and obviously trying to get a system like that to become MTD compliant is hugely challenging. So realistically, what you can't do is turn around and say use MTD as the sole reason to upgrade an accounting system, because of course accounting systems are very expensive, and the projects to migrate are huge, take a long time, and quite painful for businesses. So that stat is it's a big number, 76%, but it's not entirely surprising, because it's exactly where we see the pain points when we're dealing with our clients, and the challenges around the data. So it's not a surprise, but it's a big number.
Yeah, I'd echo that as well. I'd probably put money on challenges with moving data around or moving data between systems. It's I guess it's a fact that you've got lots of different systems, software packages, and they're not all designed to seamlessly work with each other, so it can be challenging. I guess like Russell said. Go on, sorry, Russell.
No, I was just going to add, it's been one of the interesting things looking at ERP projects. It sometimes has been quite hard for tax to get a seat at the table. So it tends to be that ERP system upgrades are very finance focused, and I've seen it work really well where tax get kind of buy into the project, because then they get what they need from it. But I've seen other examples where finance will kind of go hell for leather to make it work for them, but then it doesn't necessarily work for tax. So even a big project to upgrade an ERP system doesn't necessarily make it easier for tax. In fact, a couple of instances I've seen it's made it harder for tax, because they have been so adamant that the finance requirements are the ones that are the most important. So, it's always one of the things I recommend is that if you're doing that ERP system upgrade, you need to make sure that your tax team have that seat at the table.
Yeah, I'd echo that as well. Otherwise, the tax returns just get overlooked. They're an easy thing. When it comes to it, you can't get the right data, and it takes ages, and it's not quite as planned. I guess not directly linked to this, but if we think back to the beginning and we were thinking about trends, and we're saying that, well, one of the trends is actually companies putting in place new accounting systems. And the reason behind that is companies, I think, are focusing more on that general compliance and taking it more seriously. And I guess if you look at, I won't mention any businesses who have suffered bad PR as such, but yeah, it's quite easy to see scenarios where if your tax compliance is not good, it can have very bad ramifications if there are PR issues with that. So yeah, that's a bit of a side project. But yeah, I guess going back to this integration with existing systems, really key. But hopefully going forwards, there are technology tools out there that can help with this. I think if you go back a few years, some of the existing systems were quite inflexible, but going forward, systems should be more flexible with integrating between different systems.
And we've kind of discussed the benefits of technology and the remaining challenges around it. But what are then, if these problems are tackled, can tech still guarantee a full, accurate tax filing, or do you think a human judgment is still needed? Russell, perhaps you'd like to answer that one?
Yeah, it's actually been an area that me and my team have been looking at quite heavily over the last 2 or 3 months. So we joined the business fairly recently, and one of the things that we went to look at was how much of particularly looking at the corporation tax process in the UK, looking at how much of that process we thought we could automate by kind of, going end to end and looking at where people were spending their time and where the inefficiencies lied. And the messages that we got, so we probably did somewhere between 35 and 40 different user interviews with different clients of ours and prospects. And one of the things that really came out, and that we totally agree with, is that you absolutely can't remove humans from the tax process. I think there are lots of areas, both across corporation tax and VAT, where there is a level of judgment, where you need to almost go all the way back to an invoice for a particular event, a client golf day, for example, where you actually need a human to interpret it, and to do that with a machine systematically is very, very tricky. So I think the message that we would go with is, what we believe absolutely can happen that we've talked about is that the automation of some of the manual stuff, so kind of elevating the data from that copy paste and having to go and trawl through spreadsheets to find the numbers to work out what you need to put into the relevant boxes. I think we can do away with a lot of that, but absolutely what we can't do away with is that the knowledge and the judgment of the people in the industry, the tax people, the CTA qualified people, the accountants that are able to make those judgment calls and to know what feels right. And I think that's something that sometimes gets lost in a technology discussion as well, that when you're looking at a tax return and when you're looking at a VAT return, often a lot of people that review them have a feel for it, and that again isn't something that you can build into a machine necessarily. They'll know if a tax return looks wrong for whatever reason. You can absolutely inform that decision with better reporting, more analytics, and the rest of it. But what you can't do is take away that human element. So I don't. It comes back to Tom's point before. We're not necessarily going to see tax functions lose lots and lots of heads, but what you are going to see are people that are, spending their time doing higher value tasks. I think that's the real message. Humans are not going anywhere anytime soon.
Yeah, you're never going to have a magic button that you can press to generate your VAT return and then file it, or like a full end-to-end automated VAT return process. It's just not going to happen because there are so many elements that, like you just said, Russell, you need someone to look at and think, well, actually, do I need to disallow this input VAT, or is this tax code treatment right? It's just more complicated than that. So yeah, there's always going to be space for VAT return preparers in terms of generating the data to then review and importantly review it. So that's not going anywhere.
And kind of moving on to the last question of this discussion, but what should then the finance and tax function be prioritizing at the moment? Staying with you, Tom, is there anything you'd like to say on that?
I think they should be looking at what the current process is like and thinking about where they want to get. And that might sound a little bit consulting speak, I guess, and maybe it is if it's not obvious where you want to get to. But I guess it's just having a clearer picture of if you could kind of redesign your existing VAT return process, ignoring the complications or difficulty with technology, how would you want it to look? Because fundamentally, VAT returns shouldn't really be that complicated. You should just be able to get the sales and purchases data with enough information there so that if you've got any transactions that look a little bit odd, you can do your review and make adjustments and then create your VAT return. So I'd say kind of have that longer term plan in mind in terms of where you want to get to and really kind of create that roadmap. And it's probably going to be the case that you do need professional advice in terms of helping you get there, because none of these things are that straightforward. But if we're thinking about the direction of travel, really, I mean, we've just discussed all the different initiatives that have been going on across Europe, and we didn't really discuss Latin America or any of the other challenging jurisdictions. The direction of travel is making sure that you've got transactional data. In the UK with the supplementary data, it's making sure that if we're submitting data, that we're 100% confident that data is right, and that's kind of where we want to get to. So in terms of prioritising what we should be doing now, I guess it's creating that roadmap and then thinking about and investigating what sort of technology tools might help you get there.
Russell, do you agree with Tom?
Yeah, I think so. It's a really tricky area, right? I think a lot of businesses that we've been speaking to are trying to find the time to go almost back to kind of look at this from a strategic point of view, sort of what does good look like, and then work out how they can get there. Because I think a lot of tax functions in the past would have taken almost a kind of a sticky plaster approach and said, well, we've got this requirement, let's just kind of bolt on a bit of technology, and we've got another one and we bolt on another one, and we kind of do it that way. I think we're now getting to that tipping point where people are kind of saying, do you know what, we can't sort of, throw into more Excel spreadsheets, or we can't just get by with our MTD bridging tool or whatever it might be, and kind of taking that strategic look to say, do you know, what does the tax function of the future look like, and how can we get there? And that's always going to be balanced with budgets and immediate requirements. Sort of COVID and Brexit being great examples we've already kind of talked through. So it is a fine balancing act. I'm not saying there's any one good answer. I think we're certainly seeing a point I made slightly earlier is, if you wind the clock back a little bit, the kind of budgets you needed to do these projects meant that they would only ever really be tackled by the very, very largest of firms. I think we are seeing price points coming down and the applicability of that technology coming up. So I do think we're going to see a bit of a shift change over the next couple of years, but it's certainly something, it's not going away. People, it's going to accelerate over the coming years, and therefore the sooner that you can kind of tackle it, the better, albeit sometimes it's just not that easy, but we'll see where we get to.
Well, you've both mentioned really interesting points around, tax compliance, global trends, how has tech grown in 2020 and the trends for next year as well. I promised the audience we'll go through a couple of questions from Ed. One of the questions that's come up is around HMRC. So you referred to HMRC needing to see evidence of compliance under digital links. Does this mean that, for example, I need to show every step I've undertaken with every calculation? Russell, maybe you'd like to answer that one.
So always when it comes to MTD and digital links, particularly the best place to go to is HMRC. They've got a particular 700/22. I know that sounds superbly geeky, but when you work in VAT, it's absolutely the thing that the single place of source of truth that we've been going to for the last couple of years, because HMRC do keep it very up to date. I think their guidance around digital links is good in places. Other areas it's a little bit more grey. Certainly, I think that would maybe, the question says, do we need to show every single step? It's not that, and obviously it doesn't actually, you're not actually changing what you're submitting to the regulator. It's that they can come and ask you to kind of show your workings. But it does mean that you need to, think about that journey from start to finish. But certainly from my point of view, if you go to that notice, it's got loads and loads of really good examples, really good kind of different areas, things like, partial exemptions and capital goods schemes in different specific areas of VAT where it takes you through and kind of will give you a bit of guidance. So I'd always point clients towards that. But we always see kind of weird and wonderful edge cases. It's almost having a look at these things on a case-by-case basis sometimes.
Yeah, I'd echo that as well. And I mean, in reality, the digital links piece is something that will go on in your business. And HMRC won't see that unless they come in and audit you and specifically ask you to run them through your VAT return process. If they do that, I guess they'd expect you to be able to show how the digital links work. So I think my answer would be just be confident that you have got digital links there and that you could talk someone through it if need be.
I've just seen the question come through on the chat about which VAT notice is. VAT notice 700/2222. That's the main one that we refer to. Sorry, I was probably not very clear.
Very well spotted. Another question that has come up is around software. So as a company, for example, if I keep having to invest in new software, so for the submission and now for digital links, what happens when MTD is actually extended to other taxes? Does that mean I have to buy again? Perhaps, Tom, you'd like to answer that one?
Yeah, that's a really good question. I guess with MTD for VAT, I guess HMRC's point was that the digital submission software, there are 500-600 different solutions that you can choose from, ranging from free up to quite expensive. So there's a pretty good market there for them. When it comes to other taxes, so yeah, your corporate tax side, if you have to do income tax self-assessment and come under the MTD regime, the answer, unfortunately, is going to be yes. However, hopefully, like MTD for VAT, there will be a range of software tools at a wide range of budgets as well.
And just one last question before we finish. The last question I have is, we've seen that obviously with the impact of the pandemic, HMRC will probably have a lot of it on its plate, especially with the complexity of the corporation tax compared to VAT as well. Do we really think that MTD for corporation tax will happen in 2023? Russell, what are your thoughts on this?
I mean, I think we have to expect it, because I think, if you look to HMRC's first statistics on MTD for VAT, they already said that, in the first year of implementation, they saved over 300 million in extra VAT that was recovered. So, the music we're getting from HMRC is absolutely that MTD is a successful agenda, and we think that, they are going to continue to push it. We heard from them in their summer announcement about being the best digital, their kind of plan for the next 10 years, that they would do a consultation in the autumn. We are expecting that either the back end of this year or into next. So corporation tax is a really hard one for them to tackle, but then the size of the prize is also quite large. So I absolutely don't expect them to kind of shy away from it. I do expect them to push on with it. And it's going to be an interesting one to see how far they push it.
Tom, do you think that MTD for corporation tax will happen in 2023?
So it's a really good question, isn't it? We know there's the consultation that was it was planned for the back end of this year. So in all likelihood, that's going to go ahead next year. It's looking like 2023. I think that's what everyone's thinking at the moment. I guess if coronavirus doesn't go away, or if there are any other issues, potentially that could impact the deadlines. I think that's kind of going to be it. And I guess if you look at what HMRC had planned for MTD anyway, they'd actually planned income tax self-assessment first, and then VAT, and then corporate tax. So they kind of switched around the VAT and income tax self-assessment bit, and then going ahead with corporation tax. So it's kind of broadly on track. So I kind of think it probably will stay there or thereabouts.
Well, on that last note, I want to say thank you so much, Tom and Russell, for joining me today and taking your time to answering the questions. And to our audience as well, thank you for joining and submitting your questions. But don't forget to check out our latest news and analysis as well on financialdirector.com. Thank you and goodbye.
Thank you.
Thank you.